Welcome back to Midcap Masala right here on ET Now. And let's get in conversation now with the management of IRB Infra. The company did come out with a mixed quarter 3 this time around. But what are their outlook when it comes to the new order wins as well as their managing their debt position? Let's understand more on that. And we are being joined by Mr. Anil Yadav, who is the CEO, Business Development and Investment of IRB Infra Developers, joining us. Hi, a very good morning, Mr. Yadav, and thank you so much for your time. And firstly, let me have a word with respect to the earnings, wherein this time around, we have seen your revenues falling almost 7%, while the EBITDA as well as margins were seen to be expanding. Why don't you firstly start by helping us understand what really panned out, what were the factors at play, and more importantly, how are you seeing the Q4 as well as FY27 panning out?
Yes. So if you look at IRB, as we have discussed in past also, IRB is now more focusing on the asset business. And if you look at we have 95% value coming from the asset business. We have asset base of almost 80,000 at the beginning of the year. And if you look at the asset business toll growth across the portfolio, that keeps surprising us on a positive side. We have seen around 12-13% kind of revenue growth on month, what the number we are reporting. On backdrop of the healthy and consistent toll revenue growth, we have been able to deliver better EBITDA margin, and even the profit was like to like basis, excluding the exceptional item, profit was up by 14%. And going forward, since we have started TOT 17, and that project has started toll collection from 23rd of January. And initial trends are in line with our bid estimate. And that project will be on full year basis, that will be adding the revenue for next financial year. So from 10-12% growth, what we was coming from the business on backdrop of TOT 17, and TOT 18 is about to start towards end of this financial year. So both projects put together for next financial year, we are penciling it around 20% plus kind of growth in the toll business. On profitability side and other aspect, we have even released our mission for 2030. In next 5 years, the IRB on consolidated basis, it will be net debt will be a zero. And the company's cash ROCE, which is close to 6 to 8% today, that will be increasing on backdrop of the stable revenue, which will be coming from the distribution from the two InvIT and O&M contract, which we have long dated O&M contract of almost 35 to 37,000 crores. And there will be a revenue coming from the asset business. So considering this revenue, our ROCE will be improving. And we have also guided the PAT CAGR of 25% in next 5 years. So I think we are on a cusp of where the company has already transformed, and
All right.
we are not doing much of
Hmm.
EP. It's largely the asset business
Hmm.
which is doing the growth.
All right, Mr. Yadav, we have a little paucity of time. Just quickly wanted to understand that I think you're for the construction and the OEM revenue. The guidance was given at 4,300 to 4,500 crores for FY26. Are we on track, or are there any revisions to this?
I think on a full year basis, we will be broadly in line with what guidance we have given at the beginning of the year. But however, I would like to highlight that the EPC business, the margin is around 17 to 18%, whereas the Euro toll business has 85 to 88% margin. And largely the profitability will be deriving from the asset business, not from the EPC business.
All right. And along with that, your net debt is actually the lowest at 0.6 times, which is actually the lowest in the sector also. But going forward, you said that in the next 5 years, you will be net debt free. But initially for the first or second year, what sort of a debt reduction can we expect happening for IRB?
So I think there will be a gradual reduction. If I will talk about next 2 years, today we were at the beginning of the year, we were closer to 1:1 net debt to equity. And I think in by next 2 years, we will be reaching almost 0.25 to zero point 0.3 net debt to equity. There will be substantial reduction in net debt to equity. Having said that, if you look at our asset addition, our asset is getting added in the private element, and we have monetized the asset of 8,400 crores and deployed that capital to fund the project of 14,000 crores, that is TOT 17, TOT 18.
Hmm.
Going forward, also, we'll be doing a multiple rounds of this asset churn,
All right.
asset recycling, where we
Hmm.
will be deploying we unlocking the capital around 12,
Hmm.
12.5% and deploying at 15% kind of IRR.
All right. And lastly, if we can have your toll collection outlook for FY27.
On toll collection outlook, since a couple of projects are starting and next financial year, we expect around 20 plus percent kind of growth in toll business.
All right, and we look forward to that. And with this, Mr. Yadav, we let you go. So good having you on the channel today. Thank you so much for your time.
Thank you. Thanks for the opportunity. Thank you.
All right, but with this, viewers, we are completely timed out in this edition of Mitkam Masala. It's a goodbye from me and the entire team who put the show together. Thank you so much for tuning in, but don't go anywhere because buy now, sell now will take the